Hello and welcome to another chart lesson update by Oliver Velez, sponsored by iFundTraders.com. My name is Oliver Velez, and today I'd like to start off by informing you that yesterday was a very, very pivotal day for the Velez Opportunity Report. It was a pivotal day because for the first time in a very long time, I actually switched to a bias on the short side, at least in terms of plays that were initiated by me yesterday. Now, a little more than a week ago, 6 trading sessions ago, I brought your attention to the ultra short S&P 500 shares, symbol SDS. I brought your attention to this inverse ETF of the S&P 500 index in the last issue of the Velez Opportunity Report found at olivervelez.com. Now, I brought your attention to this inverse ETF on this specific day, and my instructions were that once the stock cleared $3.25, I would actually establish a long position and use the absolute low of SDS's most recent downdraft as a stop. That protective stop would obviously be placed slightly above $28. Now, on the following day, that buy trigger above $30.25 did not occur. And we, of course, experienced a little pullback here, another bull elephant-like bar. Those of you who follow my work know what I mean by a bull elephant-like bar. And the trigger above $30.25 finally occurred yesterday, Monday, at which point I made my plunge, placing my protective stop at slightly above $28. In fact, $28.10 to be exact. Now, if you look at the pattern that's formed in SDS, you can see that over the last several months, the move to the downside has been tight, it has been powerful, it has been one-directional, and it has dropped in a 45-degree-like fashion. Now, if you go back to one of my prior reports in the Velez Opportunity Report, I did a special issue on 45-degree angle moves. They represent the most powerful trends in existence. A move to the upside or downside that is steeper than a 45-degree angle, those moves typically are not the enduring moves. The steeper the move, the shorter its duration. Now, you can also have a very gradual move that is far short of the 45-degree-ish angle, and that move typically peters out because there's not enough fire or oomph behind it. So you can have a move that has too much oomph that will not last, and you can have a move that does not have enough oomph and it will not last, making that middle of the road, that 45-degree angle, perfect. Now, after this 45-degree angle move to the downside, for the very first time, we are finding activity that is moving above its key 20-period simple moving average. And for the first time in a long time, SDS is able to break into a multi-week high. I believe this is a very pivotal point for the market, and we could see SDS gradually move to retest its prior high over the next several weeks to perhaps even the next several months. So stay tuned with this one. I'd next like to move to the next short position that yesterday happened to trigger for me. That short position is on the ultra short Dow, symbol DXD. This also is an inverse index, meaning that by going long DXD, we are essentially going short the Dow to the second power. In theory, DXD will rise twice as fast as the Dow falls. So if the Dow were to drop by 5%, the theory behind DXD is that it would rally, being an inverse ETF, 10%, 2 times the general average of the actual index. Now, because of fees and leverage and costs associated with the ETF, you don't exactly get a 2-to-1 ratio, but you certainly get a better than 1-to-1 ratio. These are not the best vehicles to use as long-term wealth plays, but for a shorter term play that lasts several weeks to a couple of months, they're perfectly fine. Now, as you can see, the same pattern in the Dow short, DXD, existed over the last several months. A 45-degree angle, very, very steady, very, very tight. No bar gets out of hand. No bar is exceptionally large. Downtrend. And for the first time in a long time, the Dow short DXD was able to move or break into a multi-month high. Now, this move up in the DXD was not quite as powerful as the move up in SDS, but I took it anyway. I brought your attention to this in the last issue of the Velez Opportunity Report 6 trading sessions ago on this bar, and as you recall, we were looking for the stock to trade convincingly above $25.90. It did that yesterday. My protective stop is just above $24 to be exact. $24.20 is the stop, is my protective stop. And this play over the next several weeks to a couple of months has the ability to retest its high as well. So stay tuned with that. As always, these are just my initial entries. If they start to pan out, I will incrementally ease into a larger and larger position as additional bullish signs develop. So please stay close to me, stay tuned as I continue to work these shorts.